So I just want to show you something that I've been monitoring, and I was doing some research on this, basically the 10-year yield, and we had this release today of the 10-year note auction. I don't like. I'm not an expert on it. I sort of just heard about this today, honestly. I've heard of yields before, but I didn't really know about this auction. I hadn't really noticed it before. Um, but it says, the figures displayed in the calendar represent the yield on the Treasury note auctioned. The U.S. Treasury notes have maturities of 2 to 10 years. Governments issue treasuries on borrowed money to cover the gap between the amount they receive in taxes and the amount they spend to refinance existing debt and to raise capital. The rate on the Treasury note represents the return an investor will receive by holding the note for its entire duration. So that's the key. The key sentence is this: the rate on a Treasury note represents the return an investor will receive by holding the note for its entire duration. So what does that mean? That means if this rate goes up, people are going to be buying 10-year. I think I think I understand it as they're going to want to basically like they're going to want to put their money into this. Look, all I know really for sure is the fact that if you look at the data, if you look at actually this, if you go and look at your charts, so for example, if you look at this 1 year, if you go back to June or sorry, what is this? January, February, March, April, May, June. So if you look from May to June, if you go back to May 10th, 2023, and you look at whatever, you want to look at the dollar, if you want to look at the yield, if you want to, basically you start with looking at the reaction on the yield, and then you can look at the reaction going back in time on things like the dollar, the euro. By the way, I found out this is the exact same thing as Euro USD, which is this. So it's got the exact same price movements, exact same thing. It's the exact same prices, exact same quarters theory levels. It's everything is the same on that. So it's essentially, it says Euro FX futures, but this is Euro USD right here. This is what that is. I mean, it says Euro FX futures, but it's Euro USD. So anyways, it's got the same exact everything. So what am I saying? I'm saying when this went up, people started buying, let me make sure I'm getting this right. Let's just go look at it. Let's go look at it. Let's go to May 10th, 2023, and let's go on the 10-year yield. May 10th. Well, here we need a little bit of data to show my point. Okay, so look what happened here. You know, so before we're up and down and we're whatever and whatever, but let's show the exact day and time. I didn't go this far back yet, but I know that it's valid because of this concept is valid. So I don't have to. I just know that this is going to be what the um. All right, May 10th. Okay, so first we went down. Okay, that's something to note. Just because the release comes out right there, that's the release of that data. 1 p.m. right here, 1 p.m. May 10th or noon, sorry, 12. That was the first time it went up. And we had a bigger one on June 12th. Or actually, hold on. We should be on June 12th. Sorry. But it did go up. Watch. So if you look, it went up a little bit, right? Actually, no, not that time. Hold on. Let's go to June 12th. June 12th. Okay, June 12th, 12 p.m. There's the news release. What do you think it's going to do? What do you think it's going to do as a result of this going up? The yield, when the yield goes up, the dollar goes down, and everything else chases it. The NASDAQ, the euro, gold, the yen, or you just in general, all other assets go in the same direction as the yield. So what happens is when this goes up, the yield goes up. So this price, even though I don't remember what it does, I tell you it's going to go up. It may go down first, but it will go up as a result of this. At some point, it's going to break up. And if I'm wrong on this recording, and then I'm going to admit that and move on. But I'm not going to be wrong. Just give it time and it'll go up. It's taking a long time, yes, but look what's happening. There it goes. Okay. When was the next one was not as significant, but that was July 12th. Okay, let's go to July 12th. July 12th at 12 p.m. Okay. And now it didn't go up as much. Okay, July 12th, but it went up a little bit. Let's watch what happens. What do you think's gonna happen? Sure, yeah, it went down or whatever, but it's gonna go up. It's gonna make a new high. Watch. Why? I don't know. Somebody's buying. So the yield is it's just going up. I don't know. It's just see. I told you. So what does this mean? How can you use this? Well, it means most currencies are going to be chasing the yield. They're going to be going to the same direction. So why am I telling you all this and making this video today? Well, because we had a release today, right here, and for the first time in a while, as you can see this chart, we started back in May, and it's going up, 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 and we had our first decrease, and we had yields go down, and that's why I'm selling the euro right now, and the NASDAQ, even though the NASDAQ, yeah, I mean, it should break down in accordance with the breakdown of the yield. So let's keep going. Where are we at? We're over here. August, where's the release? August 9th, 12. Okay. August 9th. 12 p.m. Just so happens to be right where I stopped it. I didn't mean to do that. But let's go to the 4 hour just so it'll be faster. So you can see these little retracements and things, and that's no big deal. I don't have levels drawn on here. But you can see it basically just came back to this little 61.8 retracement right here. And if you draw your quarters theory levels out on this, I don't have any on here right now. I need to draw some. You'll see that I'm sure it's reacting off certain levels. We had a similar thing happen here. Retrace a little bit deeper, but basically, and if you don't like that, then there's basically this order block right here. And back here, I wouldn't say there's really an order block back here. I don't know. If you were going to say that, then it would be because it just didn't really have that much structure to the move to say that yes, there's an order block. But if you zoom in far enough, you could probably see a little order block there. I don't know what happened to my little thing I was drawing, but oh, is it there? Hold on. Little microscopic order block right there. Either that one or probably actually this would be the better one here. But I leave that one just because, you know, it could have retraced back into it. But yeah, you look and you see what happened. And there's your entry, you know, right above that order block. Stop loss, you know, wherever you want, either below the order block or down here. But you basically can see what's going on based on these yields. So what's my next most obvious prediction here? I haven't like gone through and like studied this and stuff to like memorize all this, even though that's not a bad idea. But I'm not saying it's going to get down there. I'm just saying if it does, we'll know why it did. You know, but really, the break of structure happened here. So if you look at it like that, you might could say well, the thing about it is that already broke down, but you could, you know, that it could potentially just go up from right there. It's really it's tough to say, especially without having my levels drawn on here. But anyway, this is just in a general idea of what's about to happen. We can see going into August, it went up again. Pretty significant increase. I'm trying to show y'all. So look just below this. So from here to here, from here to here, we had a pretty big increase there. It went from, you know, oh sorry, that's August. Anyway, from here to here, here to here, it went from 3.857 to 3.999. So that's a pretty significant. So let's watch what happens. We're on the 4 hour now, so it will be quicker. Okay, it went up. And look at this. Look at this. Boom, boom, boom. News. It's just like every time it's released. I know that says 10 a.m. I don't know why it changed. I think because I changed to the 4 hour. Yeah. Anyway. Okay, so when's the next news release? And the reason I picked this order block is because it's the order block right before the breakup structure. And you could look, let's see, back here. I don't know. That's not really clear. This is not super clear to say. There was a breakup structure here. You know, a tiny little pinprick there. But if you consider, you know, you talk about this breakup structure right here, then you got your order block here. And that's the one it tapped into. I never did that. These things just, it is what it is, you know. You know, but the I mean, I guess you could say from here to here would also be an order block, which, you know, remains valid even through all that choppiness. Just keeping a check on my trades. I gotta close these trades before 410 on Top Step, so I'm not expecting much out of that. That's why I'm kind of goofing off a little bit right now. Yeah, so anyway, we can just understand what the market is trying to say. The market is trying to say, we broke structure, okay, and it's trying to say, okay, let me find an order block, let me tap into some orders, okay, so we can continue higher. All right, because the this thing is increasing, the yield is increasing, right? So we're following the yield. And I guarantee you, you know, if you look at, if you compare this side by side with, you know, as you can see here, look at this. 10-year yield went down. What happened to gold? It went down. Okay, what's happening to the NASDAQ? It's going down. What's happening to Euro USD? It's going down, or it's trying to. You know, well, that's the 1 minute, so we have to actually go to the 15-minute to be able to see it. But yeah, so it's trying to break down, okay? Even the yen is trying to break down. Everything's trying to break down. Basically, the dollar is actually trying to rally off this fib level in this order block right here from this break of structure. You see how that... all the markets basically do the same thing, but there's a driver, right? There's a driver in the market, and what's that driver? Well, it's interest rates, okay. But what are people trying to get out of the market? They're trying to get a yield. They're trying to get a profit. That's the reason why when interest rates go up in the United States of America, people buy the dollar. The dollar goes up, and when the interest rates go down, in America, United States of America, people get their money out of the dollar because, you know, they're looking for, well, if it goes low enough, right? And if another country raises their interest rates, like if the euro, if the European Union, you know, they raise their interest rates, or however that works, you'll say like Great Britain or UK raise their interest rates, then the GBP USD, people start buying the pound, and you'd see the GBP go up. Because people are putting their money into the pound, they're buying the pound because that's higher interest rates. So wherever they can get more money, that's where they're going to go. They're seeking yield So, like I said, I'm not an expert. I don't fully understand all this, but what I do know is that currencies follow the yield. Okay, and that's what I'm trying to illustrate. Um, so we're going into September. Okay, so September had an even bigger increase, 912, from 3.999 to 4.289. That's a huge increase. Okay, so let's go to September 12th. Okay, and let's mark that out. We're gonna have to just put 10 a.m. Okay, I know it looks like uneven. Where's that vertical line I hid? It's like, it doesn't seem like evenly spread out, but that's the right date. All right, September 12th, 10 a.m. Let's see what happens. Oh, before that, hold on. Straw fibs or fib. Okay. Let's find our order block. Okay. Let's see what happens. Well, the markets are waiting on CPI. That's why they're not moving. And up it goes. Watch it go up. Really, really up. Should be going higher than usual because it was a larger increase. You see, it's based on, you see how much higher it went than previously? Because this was a very high increase in this number here. Okay, but so watch what happens the next month. On October 11th is an even larger increase. Look at that. From 4.289 to 4.610. You can just tell by the bars that it's a larger increase. I think it's still very significant, and what we're going to see is an increase in the 10-year yield. You can see it just tapped in just above it. That's why I say, you want to enter above the order block. That would, a good entry would have been that the 70% retracement right here, the sweet spot, or just the 61.8 retracement level. Either way, point is it went up. We got obviously we got another break of structure. Okay. So the point is, we can see what's going on. That's what I'm saying. So the next release is October 11th. Okay, right here. Okay. So let's mark that. Oh, it already happened. October 11th. (10 a.m.) Okay. Because I can't actually mark the 12 p.m. on this. I'm not sure the fib is going to work on this one. Well, because we've already had the news release, it didn't retrace that much. It did not retrace that much. There are equal lows here, relatively. But I'm going to draw, for the sake of consistency, I'm going to draw everything I've been drawing. The order block, it's hard to say, really, which one. But the one that I'm leaning more towards right now, not that I'm, an expert or anything, but I would be very interested in if it got down to there. But I don't expect it to go down to there. So, because the number has already been released, and I think we're just going to be off to the races. Obviously, you can see it's already taken off. So anyway, let's just see what happens. Okay, stop right there. There's a reduction that happens on November 8th. Okay, let's mark that out. Now this is going to be interesting. To try to see what happens, because I haven't really looked at this before that much. Okay, there we had a drop down. Okay, now the number just got reduced. Okay, the number just got reduced. So now we're slightly bearish on the yields. Okay. Slightly bearish on the yields. What does that mean? Well, look at this number up here. And this is what I'm talking about with quarters theory. Very interesting. Isn't that very interesting? Look at this. Look at this. What is that? What is that? Do you guys know what that is? That's a half quarter. That's a half quarter level. Perfectly perfect. Look at that, okay? Now, notice something else. Obviously, we had a breaker structure here, okay? But what we want to note is this breaker structure right here. Okay. This is what becomes significant right here, right now. Okay. So we have an order block up here. Okay, so let's watch what happens. I predict that it'll come up here and then go down and make blow down through all this, down somewhere right around here maybe, until we get that next news release. Okay, so it did not even get up to the order block. So that's just showing you how all of a sudden bearish they are, and some of that is profit taking. They're wanting to get their profits, and get their profits on the books, and so that's what they're doing there. And it just didn't even get up to their. Now you say, well, look closer. Okay, let's look closer. So if we look closer, we got the breaker structure here, right above. You could actually probably be smarter actually to say that this, maybe we could say this necessarily was the order block, because it was the last push up before it slammed down, and broke that structure. So you could say that this was it. My bad for not catching that earlier. Alright, so we're almost up to today. So we're going to actually go one more. Let's refresh this. And here we have today. Okay, 11 or 12:11. It went down even more. You see that? Okay, 12:11. This news release was at 1 o'clock. Actually, that last one was at 1 o'clock too. Okay. So let's see. Market down. 12:11. We'll mark it at 2 p.m. or 2 p.m. It was just before that line is when it hit. My prediction, and honestly, I didn't have this analysis going into the day. All I did know, or was pretty sure about, was that if the number came out lower, that it was going to be bearish for yields. And sure enough, there was a pretty strong reaction at that time right here, and it's going down, and everything's essentially trying to break down. It just doesn't happen in the blink of an eye, a lot of times, sometimes, but anyway, what can be my prediction here? Well, where's our so after this we had another break structure right here. It came back into this order block. I don't know if you can see that right there. Came down, another breaker structure, tapped up in here again, another breaker structure right here, and it kind of came up, tapped into that again, came down. So pretty clean price action. I wouldn't be surprised if it just kept going down. So let's just play it and see what happens. Okay, and here we are. It's actually not letting me go. past right now. We're gonna have to wait till next week to see, what really happens. But anyway, that is gonna be the video, and anyway, I hope this was interesting and informative, and I hope you understand what I have been trying to say about the yields. I actually have all the yields right here, but the one that I'm focusing on, because it has the cleanest price action. Now if you look, if I go down to the 15 minute, they actually don't have very full. The 2, the 5, and the 30 don't have very full candles, but the 10-year is just very excellent. So anyway, that's what we're following, and I'm not too sure like which one is like the best one to follow, but honestly, you can't even really follow the other ones that much because the price action is not that clean. So I'm going to assume that, because the price action is more clean, that there's more buying and selling, more volume, which I could look at the volume and see. But anyway, I'm going to assume because of the clean price action that it's more highly traded, and so use this one, but you can see right here, just to sum up this video. I know it looks like a lot, but just to sum up, the US 10-year note auction was increasing all the way up to here, and it decreased for the first time on November 8th, right here, and then today also. But it already started reacting off of this level before that was even released right here, and then it just kept going down. And my prediction is, that it'll just keep going down, going into next this whole rest of the month. I think yields are going to keep going down, and I think the dollar is going to go up, and everything else is going to try to chase that 10-year yield. This here, it doesn't surprise me, because I think it's going back up for a really to get a better test, because there's orders up here, and it didn't really hit that level. And also it's almost 4 o'clock, and people are trying to basically close their positions and stuff. So I don't know. I might close these positions here. But it doesn't have to get up there, because this didn't wait, and why should this wait? So we'll see what happens. But anyway, that sums up the video. Hopefully this was educational and open your eyes to the importance of the yields and 10-year note. And this was not a comparison to say let's look side by side at, say, the 10-year yield and the something like the Euro USD, even though we could certainly do that. you know, actually it wouldn't be hard at all, even just to do that real quick. But you know, let's look at something like the 4 hour, and you just get that crap off of there. And if you just look, it's basically identical. You can say not completely though. Really, look. See, because the euro is going up the whole time from here to here. As that was going down. But anyway, if you can figure out a way to use the yield in correlation with these other assets, you know, that would be a profitable thing to learn. But I guess the real point of this video at this point, I could say, was just to look at how the yield reacts to the US 10-year note auction. So anyway, with that, I am going to go ahead and stop this video, and probably gonna get ready to go take a walk. So alright, well, thanks so much for watching, and until next time, we'll see you.